Hi, today is Monday the 12th and this is the SPX Outlook for the coming week. We are going to look first at the 4-hour chart. As you can see on the 4-hour chart, SPX on Friday hit the strong resistance. This is a strong resistance across the board. The 1-hour chart is the same. We will see that shortly. And what we can of course see is that the moves are still pretty wild. We had a mini sell-off on Wednesday ahead of the FOMC minutes, which did not contain anything really new. It looks like the Fed is definitely getting a little bit more hawkish going forward. The word inflation was mentioned about 84 times, if I'm not wrong. So yes, there could be something brewing. And if we look at the 10-year, 2-year swaps, it's looking like, it's basically the 2-year Treasury is about flat. So it looks like, yes, there could be a little bit of an uptick on the shorter end of the yield curve, but overall this is still a market where the treasuries are bought and at the bid, because of course the Fed is buying them, so sellers are pushing up the price. So is it QE or no expectation of inflation picking up, which is the Fed rhetoric? It's difficult to say, but let's say that rates and yields are not really an issue. The issue, if there's one, will be the correlation to Nasdaq. Very, very strong, and the Nasdaq is very bullish. It's about to break this resistance because obviously it is aiming for the 15K, which is a very important level. So we must monitor what's going on the Nasdaq to see its consequences on the SPX. The SPX is a little less correlated to the Dow Jones compared to historical values. So really it's a tech rally that is pushing everything up. So on this 4-hour chart, we see that the market may go to 43.75 again if the Nasdaq keeps pushing up. It may even try and penetrate it, but as I said, this is a very strong resistance. This does not mean that we have to be contrarian from here. No, the market is still overall on a grinding mode. It's a retail fueled momentum. Volumes were very low on Friday, below 3 billion shares traded. Of course, if institutions start selling big time, yes, we could have a correction, but at the time they are quite happy feeding the retail demand at a good price. So this is what we see here. So this is a strong resistance, and if we look at the longer time frame, we see that of course it looks like this bull run is not really sustainable, but we see that this is also a strong resistance here. So I would say bullish congestion, and of course if it breaks out, we don't know where it's going, maybe a lot higher, but I would say the market should take a breather around these levels. Lastly, let's look at the 1-hour chart for today. This is what we are seeing. There was a little bit of profit taking overnight because of this strong resistance. It just went down to the channel boundary. This is still not a sell-off sign. We have those fibs here, and I would say the one with pivot is probably the most important. So 43.35, 43.40 would be the support to watch. As you can see, this is a very clear trading range from 4300 to 4380 more or less. So of course we have some news this week, and we have the financials posting their Q2 results starting tomorrow, mostly up to Friday, and there will be a few important news. Personally, I will watch for retail sales on Friday, because if the demand or consumption starts fading out, it may actually have a very strong impact on the recovery or growth going forward. So I'll keep it short today. I would say bullish congestion, and of course there will be updates on Slack as usual. Thank you for watching, and bye for now.